Welcome to the Commercial Know-How podcast, where mortgage brokers learn how to successfully launch, manage and grow a commercial finance business. I'm your host, Belinda Gibson. Join me as I draw on more than 25 years of property finance expertise to show you how to diversify beyond residential and build a growing business for all seasons. Don't forget to hit subscribe and visit commercialknowhow.com.au to download my free ebook to help you get started in commercial finance. Now, sit back and enjoy the episode. Hi everyone. Today on the show, we are excited to have Rebecca Evans from Judo Bank to join us to talk about commercial lending. Rebecca is one of the directors for the third-party channel in Victoria, and she's here to share their expertise in the commercial lending space, their story, some tips on commercial lending and best practice. Hi, Rebecca, and welcome to Commercial Know-How.
Hi, Belinda. So happy to be here.
Oh, that's great. So let's get started. So, Rebecca, you and I have got similar backgrounds, having worked at the same major lender in the past, and we've got many common colleagues in both banking and the broker industry. For the listeners who haven't met you yet, can you tell them about your background, your business, and why you are so passionate about commercial lending?
Absolutely. Goodness, if I go right back to the start, it might age me a little bit. But in essence, I did a double degree at Melbourne Uni, which got me the privilege of entering one of the graduate programs at one of the major banks. And that went straight into commercial banking. So I've spent the last 15 years working my way up through specifically commercial banking, which again, for those that aren't across it completely, is the small, medium enterprise space. So not your big corporates and not your micro business, but just that really key SME space. And so having spent my entire career in that space, starting as a grad and then a junior assistant and working my way up to being a senior relationship manager, I was poached over to Judo just before they earned a banking license about 5 years ago. And then I've been one of the founding bankers at Judo and then more recently transitioned into the broker space. So I also have the privilege of helping my husband to run a small business in the air conditioning trade. So I feel like I live and breathe SME business. It's all I've ever known. It's what I'm so passionate about. And I get to see it from the banking lens and from the customer lens, which helps me to, I think, understand and articulate both sides of the spectrum.
Yeah, I agree with you there. I found it a lot easier to understand business transaction. Having been a business owner and my husband being a business owner, it's just easy to put yourself into the client's shoes. Now, for listeners who haven't come across Judo yet, they do have a few niches and guidelines. One being their minimum deal size is 250, and another is that they typically won't quote you an LVR, which takes a little bit to get used to, but it's all about relationship banking, where they're looking at the whole transaction, the client, their income and their needs. So Rebecca, niche markets such as commercial lending and bankers that understand business require a specialised knowledge and approach. So how does Judo identify these niches, and what steps do you take to tailor the services and offerings from Judo?
Yeah, absolutely. Goodness, Judo need to get you on the pay grade. That was beautifully articulated. In essence, Judo came to fruition, as I said, 5 years ago, to really address the market failure, or our perception of the market failure in good businesses not being able to get loans. So we saw there was a gap. You know, what the major banks do is brilliant, and what the non-banks do is also brilliant. It's really clear, easy to follow policy. So if it works there, then that's brilliant. The question is, what happens when it doesn't work, and how do businesses who deserve funding receive funding? And that's those salt-of-the-earth business owners that live and breathe what they do. They're passionate. They can answer any question about their gross profit margins or who their target market is and how they're growing and everything about their business. But perhaps they don't fit this cookie-cutter box that you get with the other financiers. Judo tries to solve that market failure. And how we do so is very much via the broker market. We're so grateful and thankful to the broker market who legitimized our offering and our bank 5 years ago, and continue to be major supporters of ours. So originally 100% of our loans or customers that we helped came via the broker market, and they were colleagues, as we mentioned, we've worked together, and many of our colleagues, we worked together. You knew that I, Rebecca Evans, know what I'm talking about, having worked at another major bank and being poached over, and that I'm genuine and authentic and I care about the customer. And so the brokers who know that about me came to me and said, hey, Rebecca, I've got this client. They just can't get an answer and they deserve to be heard. Will you listen? And that practice of saying, yes, we will listen. We acknowledge it doesn't fit a policy elsewhere, but if you as a broker believe in your customer and believe that they deserve to be heard and there's a funding provision that we could provide, will you listen? And so it was the relationship that we have with you, Belinda, and then your relationship with me and that mutual trust that finally gave a place or a financier that the customer felt they could be heard.
Yeah, I love that response. It's very true. It's all about the customer and finding a solution for them. So we all have that transaction that sticks with us for good and bad reason, one that changes a client's life, one that makes us proud, or ones that we haven't been able to help. Can you share with the audience a brief case study that has changed the life of a client, and what was the background to this?
Oh, goodness. I mean, I could provide hundreds upon hundreds, having the privilege of being at judo for the last 5 years. So many spring to mind, and it's very much around those ones where perhaps they can't show what we call in the industry historical servicing. So looking backwards, the numbers don't work, or they don't have enough equity in their home. And so again, often a bank will say, what's your home worth? And I'll give you 80% of that if it's a residential, or 70% of that if it's a commercial. So one of the ones that really sticks with me was a kids gymnasium. So think about, my daughter walking along the balance beam or swinging on the bars, that sort of style, which really helps the community and the kids and the person that had been running it for the last 10 years. Really, they got the opportunity to buy it, but the numbers weren't there. So the vendor was selling it with, in essence, a loss-making business. But they'd identified the manager to run it, and the manager had really started to take the reins 6 months prior, and had taken the numbers, so that the kids, they'd taken the numbers from 100 a month to up to 300, and had reworked the timetable to be able to fit more kids in, and had really done a big marketing push. And you could tell that it was this manager that had really turned this business around, and they were given then the opportunity to buy it from the vendor. But as you know, Belinda, a bank assesses appetite based on those profitability numbers. And if you can't show the profitability in the numbers because the previous owner had run it at a loss, you can't get funding. We at Judo listened to the story. We met this manager who wanted to buy it, and that person was fully geared on their home. So they had no equity to offer in the home, but they had some cash savings in addition to that they were able to draw. And we looked at the last 6 months and we saw, goodness, you've really turned this business around. Tell us what you've done, and tell us what you continue to do once you really truly have the reins. And we were then able to get such comfort in that person. It was about the person, Belinda. It was about them. It wasn't really about the numbers then. And we could see what they delivered in the last 6 months, and we were able to extrapolate that out and then look at the projected position and really then get comfortable. We lent 70% of the purchase price to that in an unsecured nature with a payback over 5 years. And so that person went from not being able to get funding anywhere to us providing them with $400,000 to buy this gymnasium that already had the 300 members, that already had the relationship with the community. And I get emotional talking about it because that person's life has been completely changed. A year on, that business is hitting their projections, making the profit. They've been able to reduce their loan. And so the value in that business and that person's life has completely been changed. And I could tell you this story time and time again. A Quest franchise purchase where they got a no everywhere because they'd never run a Quest before. but they were able to articulate to us through the support of the broker what their transferable skill sets are. It'd be like if you or I run a business, we've got transferable skill sets out of banking, and they respected us by articulating that in a business plan. And we bought into that. We met them and said, you know what, I think you can run that. So they got to know it every financier because they hadn't run a business in that franchise model. But we believed them, we backed them. A year later, again, the Quest doubled in value. They had so much free cash available from the profitability of the business that they were running. They went and bought something else, which we also funded. So goodness, that's where Judo is so special, in that those deals that the brokers can't get funded anywhere, and we listen and we fund those businesses. We do change lives. And it keeps me here at Judo 5 years on, so excited about what we do.
Yeah, I love both of those stories, and they're those ones that you know you're going to have a client for life with, and a broker that's going to come back to you time and time again, because no one else could help them. And, they're great stories, and I'm sure, like you said, there's hundreds and hundreds of more lives that have been impacted by Judo being there to listen. And then what about a difficult one, Rebecca, like the one that got away, or a transaction that you felt the bank should have supported, but they didn't, and why? Because I know I had stories like these from when I worked in a major bank as well, which is one of the reasons why I became a broker.
And one of the reasons why I came to Judo.
Yeah. So there were those ones that you fight for, but yeah, tell me about one of those.
Yeah, and it's also part of Judo's growth story. So as we've grown, when I first started, our max loan was 3 million. We now go up to 35 million. So as we've grown, every business owner knows about concentration risk and diversification to protect for downside, loss of default, that sort of thing. So as we've grown, our appetite's evolved and shifted. And I'll never forget this one 2 years ago, where it was the salt of the earth client, just an absolute brilliant client with a great business that was growing so rapidly, and they wanted us to lend to the projections, and they wanted us to support them to bring in a significant amount of equipment from overseas to really drive efficiencies in their business. And looking backwards, you couldn't show that they could afford what they were asking for. I'm talking kind of $8-9 million, so a big one. And we'd only just increased our appetite in terms of those debt sizes. And I just thought, I just wanted to do it with every essence of my being. And probably it was just beyond our grasp at that point. We don't have an invoice finance facility on offer. So that sometimes then changes banks' assessment of that loss given default and that capital allocation that you need to put aside. So we were really asking to do a big unsecured, meaning like no property involved and beyond their current debtor balance, so their accounts receivables, which does give banks some level of comfort. Imagine if you have a $3 million accounts receivables book, the bank would then have comfort to go to that 1 or 2 million of that book, but we were looking to go well beyond that. Anyway, long story short, unfortunately, we couldn't get there, and we really tried. We tried for 6 months back and forth, getting as much information as we could, and in the end, we weren't the right fit for that client. And the broker actually, after all the support with our back and forth, because we try to be really transparent in explaining why we're feeling like we can't quite get there and what we'd need to see to give some additional comfort. That back and forth process for 6 months actually did benefit the client. They ended up being able to place it with one of the major banks who had an invoice finance facility on offer, which enabled them to then provide gearing up to 85% of the value of that accounts receivables book, which meant that they would then had more appetite to go unsecured on the flip side, and then be more aggressive on supporting the equipment from a P&E perspective. So they were able to do that because we helped them on their articulation of their story. We aren't going to be the right financier for the client at every point. And if we've helped a client to get a solution and an option elsewhere, then I'm still proud of that. I'm devastated that we weren't able to get there at our point in our life cycle. We just weren't able to go to that level of unsecured debt based on our balance sheet as a bank and based on our comfort level in terms of the risk that we could take. But The client was grateful and they were able to secure the funding ultimately, which we knew they were always going to do because they were continuing to trade while growing. And every month they'd have a record sale. So every month, as you'd know, Belinda, their position from an annualized interims perspective got better and better. We love it when a customer's got that support from the broker, their accountant, they've got sophisticated accounting platform that they can generate current numbers, because every month you have a cracker month, it means that you can potentially access a higher debt level. Really happy the customer secured funding with a major. Devastated it wasn't us, but we were transparent and we just weren't able to quite get there at the time.
Yeah, it sounds like balancing the risk really over the deal size, and what's a major bank transaction versus what's not, because they can mitigate the risk a little bit more if they've got different lending
and different product offerings and suites and line of sight. Sometimes a bank, if they have the transactional, they get more comfort because they can see the ins and outs, whereas we don't currently have a transactional banking offering nor a invoice finance facility offering. So we're not able to see the invoices. We're not able to see the payments and what's good and what's bad and whether there's dishonors and things like that. So if that, we understand why we couldn't get there, but it's still heartbreaking, isn't it, when you meet the customer 20 times. But that's where I think the relationship is so well held and rightly held by the broker, because they can partner with the client regardless of which financier they're with. And then the financiers change and evolve. So really the broker can be with them for life, making sure that they're always with a financier that best meets their needs.
Yeah, I agree with you there. And so for brokers who are new to commercial, wanting to diversify their business, or they perhaps have a challenging transaction, what tips and advice can you offer to help brokers thrive and have a successful transaction with?
Gosh, relationship. Can I say relationship again? Brokers that actually care. If you are just selling the interest rate, then you and every other Joe Blow, you're not doing anything different. It's a race to the bottom. It's not adding any value. It's not uncovering the story. So my biggest point of advice would be, in commercial, you need to know your client and you need to care, and it's about what is in the best interest of my client. Brokers that are driven by commission and a fight for the best rate are missing out on the entire picture. And if you're missing out on the entire picture, then you're missing out on opportunities and stickiness. We say in the banks, you'll know this, Belinda, when, if you have 2 products, the client's at risk. If you have 3 or a bit more, if you get up to 8 products with the bank, it's so sticky. Now, if you are in with a client and you are able to help them with, let's just say, the first working capital need, but then you ask, what's this being used for? And then, oh, your goodness, you uncover that they need a deposit for a piece of equipment coming from overseas. Then there's an opportunity for a letter of credit, for an import opportunity, for an asset finance. Then you uncover, are you looking to put this into the building that you're operating out of? Oh, right, because the landlord wants to sell it to you. Oh, then there's the factory opportunity. Oh, and you don't want to use all of your capital because you want to overgear the factory because you want to help your daughter to buy a franchise in Just Cuts, a hairdressing franchise, and you want to help it. Oh, so there's a franchise purchase opportunity. Did you know you don't need property to buy that? We could help you in an unsecured nature. And then your daughter's husband wants to buy an investment property. And can you see how when you take it away from just what is the cheapest way to get that first working capital request, we can all go to any finance, Shift, Banjo, Lumi, Prosper, Mueller, BizCap, any working capital financier, and get that really quick response. But if you don't ask why, what do you need it for? What's your business do? I've had deals come in where they don't even know what industry their clients operate in, and they just forward me a realestate.com link and say, what's your LVR? Oh, no. That is not how we operate in commercial. And if you are coming to BDMs with that approach, they're going to very quickly lose interest and move on to the next opportunity. Whereas if you operate like Belinda does, where you've done a genuine fact find and you've uncovered who the client is, what their key driver is, because that changes. A naive broker thinks it's just rate. There is so much more. It may be cash flow, it may be available capital, it may be less security and protecting the primary residence and not having it included in the mix. And it may be price, but that may shift over the client's life cycle. And so if you want to be with them from the entire life cycle, then you can't just focus on one of those pillars. You need to be across them all. So look, that's a very long-winded answer, and I could talk all day about what's best practice, but that would be my biggest tip: relationship. There's so many brokers signing on to be brokers every day of the week now. So you will have other people talking to your clients. It's inevitable. And so therefore you need to be across them and know them and live and breathe them as a point of difference beyond who can fight to the best rate.
I love that answer. And even in the resi space, it's never about price anymore. It's more about policy, particularly when you deal with self-employed applicants all the time. And it's the same with commercial and business lending. It's about who fits where and why, and understanding the whole transaction, not just what they're trying to do right at that second. So I really love that. And what else can you share with us about judo that makes a bit of a point of difference? I know you have covered off a lot, but what's a couple of things that stand out for you?
Yeah, absolutely. So beyond listening to the story, it would be, when do you come to judo, is for those partially secured deals. So these days it's quite easy to get an 80% LVR, even 100% LVR for a commercial owner-occupied factory. Beyond that, it's that, have they won a new contract? Have they gone through a blip, but they're working their way out of it? And you need someone to listen to that. So it's projection lending. And then it's that unsecured, so they don't want to tie in their homes. Or sometimes it might be that hospitality group that really wants to rapidly grow, but there's 3 different partners with different positions personally. Some may have equity, some not. And it's not fair to have their property in the mix, or one person's property when they've got equity but not the others. And so thinking beyond that property security lens, we've done a lot of really aggressive growth lending based on a leverage position against profitability. So rather than leveraging the property, looking at leveraging the consistent profitability going forward and how we articulate what that might look like. And by being focused on then doing that from an unsecured perspective, it really sophisticates the lend and means that it's fair and more equitable. The interest is paid for, the liability is held by the business, not which one of the 3 parties has equity in their home. And so thinking of us for unsecured, partially secured, and who's there to listen to the story. We're really hungry regionally as well. So we're growing our agri and regional base. We see that that's where our relationship-led, character-led lending resonates. So we're looking to put on another 20 staff all around the region. So because we don't have postcode restrictions and we're not driven by the equity in the property, rather by the people and the income, that works really well regionally, where we hopefully can have a more aggressive position based on good people out in the regions. And we know as well, reputation means everything out in the regions. And so if a broker says that this person is good and they're living and breathing in the community and they're down at the local footy club, they're going to mean it. It means something. It holds weight because they don't want to lose face in their community because they're small communities. And so we lend to that and support that. And that really adds value in our understanding of the story. So that's probably when you think of judo. And we're not trying to offer apples with what other people are doing. Most of the loans will go to those other people because they do it really well and they've been doing it for a long time. So it's about recognizing and identifying those few that judo can really help and offer something different for.
Yep. So there you go. It's about understanding the client. It's about building the relationship with not only the client, with the broker, and without any channel conflict, which sounds amazing. So thank you very much. So that brings us to the end of this episode. Thank you very much for joining us, Rebecca, on Commercial.
My absolute pleasure, anytime. And feel free to hand my phone number out to anyone you need.
Oh, most definitely. And I love that you've shared some real life scenarios that have made so much difference to clients working with brokers. So thank you for joining us on Commercial Know-How, where we explore the importance of building confidence, refining commercial loans and empowering mortgage brokers to excel in a diversified business. To find out more about commercial know-how, you can visit our website at commercialknowhow.com.au, where you can also download my free ebook, and don't forget to follow us on your favourite podcast player so that you don't miss an episode. Thanks for listening to the Commercial Know-How podcast. Don't forget to visit commercialknowhow.com.au, where you can get in touch with me or download my free ebook to help you get started in the commercial lending space. If you enjoy the show, please hit subscribe so you don't miss an episode. See you soon.